Oh, everybody, look, we're so far away. AB, look. Oh, now we're getting closer, and stop. Perfect. What's up, everyone? Welcome to Benzinga Live. I'm Spencer. That's Aaron. Let's get this show on the road.
Let's get ready to rumble!
Benzinga Nation, jam-packed show today. Peloton up 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna, the best trade idea resource out there. So, Mr. Spencer, let's start off.
What's up?
Let's start off the show today with a quick news update. That is how we will start every show, or try to. And today it is all about cars.
Cars?
Cars.
What kinds of cars?
All kinds of cars.
All kinds of cars.
Let's start with the big news of the day. That is Avis. The stock went up more than 200%. Ticker car. It went up 200% after the company reported blowout earnings yesterday afternoon. The stock surpassed $500. And as I'm aware, the highest, what was the highest strike price on the option chain?
$260 was the highest strike. So if you, let's say, hypothetically, in theory, on paper, spent $1,000 yesterday on the $260 strikes, you could have made like 700 grand today.
A lot of money.
Yeah,
and so the stock is trading off its highs, down about 30-40% from that level that it hit above $500. As you can see the chart on the screen.
Let's go to a monthly. Let's zoom way out, and you can just see how far back. Like, if you bought this stock in March of 1998 and you paid $415 and you sat underwater for 23 and a half years. Well, today is your day. Congratulations. You made your money back 23 and a half years later. Well done.
Yeah, I mean, this is just, we've had these crazy stocks. It seems like a few, over the past few weeks from DWAC, now we've got cars. So it doesn't look like this market's done with just having these runners that go crazy. Let us know in the chat if you were in car at all today. I hope you did not buy above $500. But yeah, no. Spencer, that is not the only headlines.
Well, hold on. I want to stay on this because this is kind of insane. Okay, I feel like every single week I'm saying to myself, this is the craziest thing or at least one of the craziest things that I've ever seen. Right? Last week, Shiba Inu was pretty crazy. The week before, we had DWAC and Fundware. That was pretty crazy, right? I don't know how all these things rank. We are in like GameStop, AMC territory in terms of just like sheer madness, right? But this is nuts. This is pretty nuts. I mean, Avis Budget. This should put this in context for you. Avis Budget it actually overtook AMC as the number one weighting in the Russell 2000 index today. It's not there anymore. At least I don't think. But for a brief moment, it was the largest stock by market cap in the Russell 2000. And it's Avis Budget Group. I mean, it's car rentals. This thing is nuts. We called this out. If you're watching live trading this morning, we called this out at like it was at like 195. And oh man, looks like it's going to 200. And then it just did not stop. Let's go to this other space I have in Benzinga Pro where I look at halts here. And let's add a filter by security. And we'll just do a search for ticker car, right? Look at how many trading halts happened in car today. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 trading halts in car. And we just got past noon.
Yeah, I mean, this has just been insane. Spencer, have you ever rented a car from Avis?
No, I don't remember. No, I think I've only used Enterprise.
Okay.
I don't know, but this isn't saying, and it's actually not just car today. There are other stocks moving off of this. If you looked at, I mean, the obvious one, right? We all know HTZZ, right? Hertz.
Yep.
The direct peer.
I believe it's halted right now.
No, it's not. I don't think it can halt. I'm not sure stocks that trade OTC can halt, but it's trading right now. HTZZ. You also have Higher Car, right? We had them on the small cap conference last week. Go blast off mode today. Got to almost $10. HYRE. You also had, I think that was it actually. I thought Uber and Lyft maybe would go, but they really didn't, which I thought was interesting. Uber trading down 3% today. Lyft trading down 3% today. So they really didn't go off that. I thought maybe they would, but the Avis thing. I mean, one in the chat if you bought the stock today, if you made money off it, because I mean, congratulations, you made a great trade. It defies all logic. It feels like we're in a casino. Is that a bad thing? I don't know. I'm just here for it. But I mean, 500. Yeah. We watched it go from 2 to 3 to 4 to 5. Just yeah.
Cole Pinder is bringing up a good point in the chat. Car rental inflation has been insane. So, a few months ago when we were getting the CPI numbers and they looked ridiculous, that we've seen, a lot of inflation. When you dissected the CPI data a little bit, it was certain categories that were driving that inflation higher, and car rentals was one of the leaders. Like new and used car prices were one of them, and then car rental as well. So that should have been a sign from us back then, Spencer, saying, look, if the inflation, if people are paying this much more for car rentals, that must mean there is the demand there and a limited supply. So maybe that was some foreshadowing to the Avis blowout earnings.
Yeah,
hey, look, the car rental companies are able to charge this much more. There's still the demand.
But no one could have seen this one coming.
No one could have seen this one coming. Heard Scrambler in the chat saying lots is junk. Car lots, of course, another one. And so, yeah, I mean, Spencer, like I said, we have some other headlines.
All right. What other headlines do we have today? Because this is all I can think about. So give me something else to think about here.
So Tesla was trading lower because Elon Musk took to Twitter and said that Tesla has not yet signed a contract with Hertz. Of course,
this is for the 100,000 cars, right?
Correct. Yeah. Okay. And they actually upped that number after the initial report.
Oh, they did?
They said they might get up as many as 150,000 cars. So now it looks like there's some discrepancy in what's going on with the Hertz Tesla contract, because Hertz is saying they're already getting deliveries, and Elon Musk is saying there's not a contract signed yet. So I don't know. We will see what happens. Hertz was also talking about supplying some Teslas to Uber. But yeah, and then on another car headline, Rivian. So Rivian, which is the Amazon-backed EV startup, is looking for a $60 billion valuation. Initial reports had the valuation at $80 billion. So the $60 billion number is lower than the $80 billion initially reported. But Wall Street Journal ran a headline today, Rivian's $60 billion EV challenge to Detroit. So they're calling out Detroit, saying essentially if Rivian is going to challenge Ford, GM, Chrysler, everyone who is, putting resources toward producing electric cars. So we will see if Detroit has a new challenge in Rivian.
Yeah, that's going to be next week, I think, right? The IPO. I think I'm pretty sure it's next week.
I'm not sure when the IPO date is.
Sure it's next week.
But yeah, Rivian, I think, will get a lot of retail interest, considering just the EV space in general, whether it's Ford, whether it's Tesla. There are a lot of investors out there that want to get and pick the leader in the EV space. So Rivian definitely has a lot of hype behind it. And yeah, I mean, this Wall Street Journal article is just essentially saying Rivian poses a competitive threat to GM, Ford, Chrysler in a way that Tesla never really has. So, because Rivian's producing these trucks, which is Ford's bread and butter. Tesla, of course, has the Cybertruck, which who knows the status of the Cybertruck. I don't. Spencer doesn't.
Nope.
And it seems like Rivian is putting a little bit more effort into these EV trucks that will directly compete with Ford. So there's the Rivian news, Spencer. And then moving on to other earnings news, we had Pfizer raised guidance due to increased vaccine demand. Pfizer was trading up about 3%. Chegg, the stock got crushed today after the company reported earnings yesterday. I haven't really had time to go in and dig into the earnings, so I don't know what happened there. But all I know, Chegg stock getting hammered after earnings. We've had Chegg's CEO or COO on the show before, so maybe we'll have to get him back on to discuss the earnings.
Yeah, maybe you know what they did. Shoot, this may have been a signal. Chegg, usually somebody from the PR team will usually reach out to us and be like, hey, we'd love to talk with you after earnings. They didn't do that this quarter. Oh, maybe that was a signal. We should have realized. They've reached out to us like 3 or 4 quarters in a row, being like, hey, if you want to, we'd love to come on one of your shows and talk about this company after earnings and what a great quarter we have. But they did no such thing this time around. So I should have realized. Anyway,
it's a very astute observation by you, Mr. Israel.
Speaking of guests and coming on the show, we should probably preview what is to come on today's show. We are going to have our first guest on here in a couple of minutes. Lyron Bentovim, he's the president and CEO of the Glimpse Group. Talking about AR, talking about VR, talking about the metaverse. That's what we're talking about with Lyron here at 12:15. 12:45, we're Rahul Kushwah. He's the CEO of Predictmedix. We broke a headline with them this morning. At 1 o'clock, we're talking Tesla with the one and the only Gordon Johnson from GLJ Research. And then at 1:30, we'll have Tim Quast on the show from Market Structure Edge. So a lot going on today. Real fast, before we bring on our first guest, because I can't move on from the Hertz thing, I just want to say real fast, there are a couple other plays off of this. You can always do the ETF angle. I'm going to drop a few tickers here on you, and I'll put them in the chat, or maybe you can put them in the chat as I say. But these are the ETFs that have the largest exposure to car. You ready? Ticker PRN. It's got almost a 5% weighting, or it did as of a couple hours ago, to car. PRN. Ticker XTN, the S&P Transports ETF, has a 4% weighting. TPOR, this is a leverage play. This is your direction leverage transportation play, has almost a 4% weighting. HAIL, hail, as in like hail a cab, right? That's your smart mobility ETF, has a 3% weighting to Hertz. I keep saying Hertz, to Avis. And last one I'll do is ticker TEGS, TEGS, has a 3% weighting to Avis. So number of ETFs that are going to trade today off this, and you can sort of arbitrage them if you'd like, or just watch one, because they're not going to move as much as and be as crazy as Avis. But a lot of plays here off the Avis madness. This is the craziest thing I've seen since at least last week, and that's saying something. Now it is 12:15. All that being said, let's move on from that, and let's talk about what had been like the story of the week for at least a couple of days before we have ADD and we all moved on from that and we forgot about it. But the metaverse, right?
Oh, I thought you were gonna say Afghanistan.
What? No, the metaverse, man. Facebook kind of kicked things off the other week with their big announcement about, hey, we're changing our name. We're going all in on the metaverse, yada yada yada, and that got us wondering about, okay, so we know Facebook is a play here. What other plays are there to be had on the metaverse and on virtual reality and augmented reality? So let's bring on the CEO of one of those such plays. Now, as I said, Lyron Bentovim, he is the CEO of the Glimpse Group. They've got a cool ticker, VRAR.
VRAR.
They must have something to do with VR and AR. If their ticker is VRAR, pretty nice ticker get. Let's get Lyron on, producer Rohan. Good morning, sir. How are we doing today?
I guess good afternoon at this point, at least in New York.
Oh, good afternoon. You're right. It's past noon. I stand corrected. Good afternoon. Okay, so let's start with this. Tell us about the Glimpse Group and what exactly you're working on, because I think not a lot of people actually understand what really is going on. I don't even get it.
Well, hopefully I do, but I'm happy to kind of talk about it. So Glimpse
Yeah.
Group is a platform company for virtual reality and augmented reality enterprise-focused software companies. So we have 11 software companies that are fully owned and operated by Glimpse Group, working on diverse use cases of virtual reality and augmented reality, all working with enterprises and organizations. So our companies are working with leading consumer companies, hospitals, universities, pharmaceuticals, financial services, you name it, to bring virtual reality and augmented reality into their businesses. And in a sense, bring them into the metaverse once the metaverse is actually built.
Okay, so what does it actually mean, though? Like, you're working with these companies to bring them in, like how?
So each one of our companies has its own software solutions, whether it's for corporate training or for healthcare kind of education, or for learning, or for social VR, for entertainment, for data visualization. Each one has their own software product, and they're working with companies that are interested in using those products to generate kind of a different way of doing things, generate ROI for their business, and push them forward in utilizing these technologies.
So is it a case of like them approaching you, or you approaching them?
At this point, mostly they're approaching us. Kind of, there's been a lot of interest in this even before the Meta announcement, and companies see what we're doing, see the innovation that we're kind of creating with customers, and come to us and say, kind of, we want to use this too. Here's what we're looking for, and then we work with them to build that.
So can you give us some examples?
Sure. So if you're a school that wants to simulate kind of certain things that you can't teach in the classroom, say inventory accounting. So we're working with a university in Florida that believes that kind of you cannot teach people about accounting while they're kind of sitting in a classroom. So we built a warehouse for them, and the students go into the warehouse and learn how to do inventory count, which is a skill that the accounting industry requires people coming in and taking a job there. So this is an example. If you're a pharmaceutical company that have a certain process where you need to train employees, and that process doesn't happen often and is very expensive, we can replicate that process for you, allowing you to train your employees in virtual reality. And then when they're ready, once they've passed all the kind of tests and you know that they know what they need to do, then they can go out there and try it in the real world, minimizing the negative cost that comes from people doing it without knowing what they're doing.
How expensive is this sort of technology to create, to run, to develop?
It's kind of just like any software. Kind of, there's an initial cost of building it, and then there's almost no cost of running it. So it's kind of, we are looking and we're working with innovative, leading edge companies that are kind of interested in making that initial investment. We're not talking big dollars, and then kind of running, and the only cost going forward is basically paying license for the AppKey of the software for us, but then they can run it forever, versus the old way of doing training where you kind of have people spend time teaching people, holding their hands. You need to have idle devices, machines, kind of basically sometimes it's dangerous or expensive to run those things. Kind of, we can save all those things.
Let me ask you this question. What is the metaverse to you?
The metaverse to me is the kind of adding a third dimension to the internet. So if you look at the internet, it basically connected us for the world for the first time. Before the internet came to be, we were not really connected. Yes, you can fly anywhere, you can talk to people on the phone, but we were not connected as a kind of global community. The internet came, and over a 25, 30-year cycle, connected us all together, but in 2D. Right now, you and I are not feeling that we're sitting. I'm not sitting with you in the studio. I can see you, we are connected, but we're not the same. The metaverse will add a third dimension to this connectivity, allowing us to be present in the same location regardless of where we are geographically. And that has huge implications on everything that we're doing.
How close is what you have right now to what we think of when we think of the metaverse, when we think of movies like Ready Player One or whatever, and it's totally immersive, and how close are we to that?
So in one way, we are very, very close. Kind of, if you go into any one of our VR experiences, you will feel presence, and you will feel that you're in that spot with those other people that are there with you, regardless of where they are physically, and you can do things together. In many ways, we're limited by the hardware capabilities, and that's what Meta is investing all of their efforts into building that hardware and the software that runs it that allows us to kind of fulfill this dream. And kind of companies like Meta, like Apple, like Samsung, like Sony are investing heavily in R&D to build the hardware that is needed that eventually will lead to this being everywhere. And then companies like us will build the software that will enable this and will build all these experiences that will be there once the metaverse exists.
What is the next? Is there a next upcoming catalyst? On the Facebook thing, which seems to have jumpstarted a lot of interest here, obviously, but outside of that, I mean, what is the next catalyst for a company like yours?
So we are continuing to execute and kind of adding more customers and building more business. And the other thing that is key for Glimpse is that we are a platform company. So we keep growing not only organically, and we've been growing organically kind of at just under 100% a year, but inorganically as well by adding more companies to the Glimpse mix and creating scale where it does not exist in this industry on the software and services side. So that's a critical piece for us. As you look at kind of bigger developments in the outside world, there've been a lot of talk about Apple launching at some point augmented reality glasses, which will add the augmented reality layer to the metaverse. Kind of the metaverse will have a VR layer and an AR layer, and there will be kind of multiple connectivity between these. And I think the AR glasses, which are long been awaited for, which hopefully will have a different form factor than the kind of HoloLens and the Magic Leaps that have been out there for a while, but they have limited utilization, would be a big leap forward.
Can you give us an example of like the kinds of companies that you would theoretically like partner with? Would you ever partner with? Because I guess it would depend on your role in the ecosystem and their role in the ecosystem. But like another platform company, I don't quite know. I don't have a great sense in my head of the metaverse ecosystem and who does what. So can you give me an idea of like the kind of company that you would, in theory, on paper, like partner with?
So we work with kind of most of the companies in the space as partners, whether it's companies like Meta, like Google, like Snapchat. Those are all partners of Glimpse. We work with the hardware manufacturers, with HTC, with Pico. We've worked with the companies providing us software that enables our developers to build, like Unity and Epic. So those are the players that play in the ecosystem. They complement what we're doing. They're enabling us to do what we're doing. But kind of that's exactly those type of partnerships that we're building. Awesome.
I'm just curious what the past couple of days, and I'll just pull up a daily chart. Just what the past couple of days have been like for you, the last week, really, because I mean, obviously, you've seen the interest explode. Searches for the term metaverse and meta or VR, AR are going through the roof on Google. You can see it, the interest in the chart alone in terms of the volume and the performance. I'm just curious what the last week has been, like, because you guys are not. I mean, you're a newer company, but you're not, like that new.
No, we've been around for almost 6 years now.
Yeah.
And I don't look at the stock. Kind of right now, you're putting it in my face. That's the first time I've looked at the stock chart ever.
Really?
Single time look at stock charts. Kind of, I know anecdotally. Thank you for taking that away from me. I appreciate that. I know anecdotally where we are. Obviously, I need to know as the CEO, but I'm focusing on our business, or continue to grow, continue to deliver great VR and AR to our customers, and thinking about my next milestone, which is making Glimpse a billion-dollar company by growing organically and inorganically. I'm super excited that the world is finally seeing what I saw 5.5 years ago and led me to found Glimpse. But we're just early in this cycle, and it's going to be a lot of fun and hard work from now until kind of we have the metaverse.
All right. Hey, do you have an ETA on that by chance?
if I had to guess, kind of in terms of where we have a connected metaverse that we're all kind of spending time in, probably 5 years away, kind of it will happen.
5 years. I like that. That's not like super uber bullish. That's reasonable. That's 5 years is a nice chunk of time.
I kind of, you know what it takes to build something, and kind of it doesn't happen overnight. We're all working very hard on it, whether it's the kind of the guys at Facebook, Meta, or kind of Glimpse, but
Yeah.
it's going to take some while before it's open to the public.
Great. All right. Lyron Bentovim is the president CEO of the Glimpse Group, ticker VRAR. A pleasure, sir. We'll have to have you back on as things progress here in the metaverse.
I enjoyed it and looking forward to the next time. Thank you.
All right. Thanks a lot, sir. Hey, all right. A couple of questions from the chat I want to get to. Somebody was asking, is CAR over? I don't know. And someone's saying my mic is too loud, Rohan. Let's see if we can turn that down a little bit. Is CAR over? Who can say? Who can say with any shred of reasonable confidence that CAR is over?
Do me a favor, Spencer. Go to the 1 minute chart.
Oh, dear Lord. Okay. Yeah.
So
we found support. Is that what you're gonna say?
It looks like on the 1 minute
We stopped going down.
chart, exactly, and that's always a good sign. We will break from this trend either down or up. So look out for that either way. But yeah, I mean, it at least looks like we're stabilizing here at this $326, $327 level. Who knows how long this will last before we see a break in either direction. But yeah, we'll keep our eyes on this chart. I'm actually looking, Spencer, we've talked about it a few times now, not to beat a dead horse, but my, limited amount of day trades I'm able to make.
Yeah.
One opened up. So I've got a spot to make a day trade here. I'll show my screen. And I'm looking for something to do. I'm getting a little antsy not being in the markets today. So if anyone in the chat has anything they're looking at that you think, hey,
Randall's looking at fun.
AB, I can't trade fun.
You can't trade fun.
I don't think so. I mean, we were talking to the COO tomorrow.
That's true. It would be a bad look. Yeah. So we're gonna have the COO on the show tomorrow. So let's you and I not even touch. I mean, we can look at fun, but we're not gonna touch fun.
Yeah. So if we see right here, I've made 2 day trades. I can make a third one. If I make the fourth one, I'm restricted. So I've got one to make today. So let me know if anyone's looking at anything. I do want to talk a little bit more about the metaverse. Mm-hmm. And I've got a stock that I think it's not getting talked about in the metaverse. When people are talking about, everyone's talking about Facebook. You've got the Meta ETF. Of course, we just talked to VRAR. But this stock, I think, maybe they haven't made any announcements on the metaverse front yet, but as this thing grows,
what do we got?
And when I say this thing, I'm talking about the metaverse. I would be absolutely shocked if this name isn't a big player in it.
What's the name?
That is Snapchat. Ticker SNAP.
Yeah, that's not a bad idea. Do you have a Snap camera by chance on your
on my laptop? I do.
Yeah, Snap camera. If you don't have that, check it out.
That's like the most used augmented reality feature out there in the world.
You're right.
It's got to be. I mean, I don't know that for a fact, but I'm saying it like it's a fact. And Snapchat's trading way down after it reported not so great earnings. Let me there we go. And so, yeah, I mean, I would be surprised if we don't see more and more investor interest into the metaverse, that Snapchat doesn't come out and say something like, oh yeah, by the way, we're going to spend this much money on R&D in. Yeah. No, that Hex Pony. Facebook does not own Snapchat.
No. But M-Tone says Glimpse is partnered. That may be true. But yeah, no. I mean, I think Aaron's point though is that people think they think metaverse. Maybe the first, second, or third name out of their mouth is not necessarily Snapchat. I think that was more.
Thank you. Yeah, it's people are talking about Facebook. People are talking about Roblox, Unity, C Limited, all these other names. When it's like, who's going to have the most users using this AR, using this VR? And I think it's going to be Snapchat, and it's going to be a matter of time. I'm not saying I like Snapchat right now.
Well, you could, but if you want to buy the dip, hey, you know what? Let's zoom in on this chart here. Do we have a low to lean on? Yes, we do. What's the low of today? 52.10. What's the low from last week? 51.66. You've got a low. if you wanted, this is how you set up a trade here. If you wanted to buy Snapchat, you could basically buy it here and stop yourself out at like $52. That's 13 cents away. Let's go to a 15-minute chart. You can stop yourself out at 52. Zoom out. You can stop yourself out at, somewhere in the 51. Like that low from the 27th was 51. What did I say again? 51.66. You can stop yourself out at 51.66. I mean, that's not actually a bad trade because you have an out. Your out is the low from the 27th.
Well, that's what I'm curious about, Spencer. So if you go to, what was Snapchat out right after the earnings when it dropped 20%? Because if you got in then and bought the dip, you're down another like 5% from there. So I like to wait until we have that clear sustained bottom. And then we see that reversal coming back up. But,
we've got but 1, 2, 3, 4, 5 lows, 5 straight days, 5 lows in the same area, 52. You're right there. This is not a terrible trade setup, baby. You may have talked me into this.
All right, let's do it then.
I think this is because we have our clear out. Obviously, we don't know if it's going to go back to 60 or 70. I mean, 80, frankly, at this point is would take a miracle to get there now, at any point in the near future. It's a long ways away, but we have a level. We can buy this. We can set our stop loss at 51.60, and that's 70 cents away. That's great. That's a great risk reward, I think. So
Shingami saying, "Oh no, AB, what did I do now? Please tell me."
I
don't know what I did either.
He's always doing something.
I'll own up to it, whatever it is I did. But yeah, I mean, we talk about these big Silicon Valley tech companies. Snapchat still led by its founder, Evan Spiegel. I would be absolutely shocked if he sits around and sees, his buddies, Zuckerberg, Bezos, and all these other leaders like invest heavily into this space. And he just sits back and doesn't take advantage of the opportunity he has with Snapchat and the metaverse. So, good on the chat for pointing out that, Glimpse is working with them in terms of AR, but I'm basically saying long-term, if the metaverse takes off, Snapchat will be a player. And right now it is at a discount. Spencer, if we want to make a live trade.
I think, what's funny though, like is the other side of that coin. If you look at this daily, like the daily chart, the period from July to October could end up being like that cloud. It just looks so bad.
It does.
Because Snapchat was not a great performing stock for the longest time, and then it had this huge run up, and then it gapped up on earnings, then it gapped down on earnings. But you can just see for 3 years it kind of did nothing, and then we've obviously run since the last fall. But yeah, pretty crazy stuff. Okay, I say we do this trade. Do you want to throw an order out there in the low 52s?
So you want me to just buy stock, don't you? I was looking at options.
Okay, okay. Well, I don't know how high. What strike do you want to go?
I want to hit $55 because I think that's very reasonable to say, hey, we can go up $3 from now until. So I'm looking at the monthlies that expire November 19th. 17
days, $3.
That's doable.
I can't see how much they cost.
Let me try to zoom in a little bit. There we go.
What does that say? $1?
$1.31 is the one I'm looking at. $55. And this isn't super high conviction for me, so I'm just gonna throw. Let's do 3 orders. So I like to do at least 3 because that way, if they're up a lot, I can trim. I can sell one, keep 2, let the other 2 run. I'll throw the bid out there. It says 131. I'll throw it out there at 132 just to make sure I get filled, and I don't care about that extra $3 I'm spending on it. There we go. We're filled. 3 contracts, $396 total. We have until November 19th. 17 days.
Yep.
All
right. Okay. I'm into this.
Yeah, I mean, I'm sure there are some different strategies as far as a spread we could have done to mitigate our risk. But hey, look, if the trade doesn't work out, and
Rando wants to know if you're broke because you only bought three calls.
3 orders. Am I broke? Put some money on the line. All right, fine. No, I'm just kidding. I'm not going to get peer pressured into this. No, this is. Yeah, I am kind of. I mean,
dude, he's fresh out of college. Yes, he's broke. Is the answer to that question?
My let's see. I think we'll be able to see like what my I'm trying to see like what my portfolio diversity. This makes up like 20% of my portfolio right now. This one options trade. So
guys. All right. Anyway, hey, real fast before our next guest will be here in a few minutes, but I don't want to lose track of time that much, because I want to do a crypto update if we can.
let's do it, Spencer.
All right.
I got it.
Oh, where's my crypto heat map? He's got it on the screen. How are we looking today? BTC in the green. ETH new highs. New highs for Ethereum, everyone. We're in 4,500 territory. Very, very nice. AB, I was doing some I don't know what you want to call it, personal financing over the week. I was doing a deep dive on my finances, and I have determined that I have my asset allocation in my life is way too much into stocks and way not enough into crypto. I've got almost all my net worth in stocks, and I've got I made a pie chart, and a tiny sliver on the pie chart is crypto. And I've got like 97% in stocks. So I need to diversify. I need some more crypto. I've got Bitcoin, I've got Ethereum, I've got Solana. I could just keep buying those three, but I'm open to more ideas. Please, no shit coins. I'm not into that stuff. I'm no Sheeb, no Doge. Someone that has real value.
So Spencer, if I were your financial advisor,
Which you are.
which I am, I would say let's trim some of your cannabis positions. And here's why.
Don't make me do that.
I know you don't want to, but here's why.
I like those, and I'm up in all of them.
I know, and I'm sure you're going to give me the bull case, but I'm going to give you not necessarily a bear case,
Okay.
just why I think these cannabis investments will not appreciate at the rate that some cryptos will over the next 2-3 years. And it's essentially just, look, I mean, does the administration right now look in any rush to...
No.
Okay.
No.
So what's going to happen over the next 3 years that hasn't happened the last 8 years that's going to make these cannabis, stocks take off? I don't think there's anything. So what I would do, I'm not saying sell all your cannabis positions, but I'm saying I would trim some and take those trimmings, the money you get from trimming those positions, and just throw it into Ethereum and forget about it. Maybe you want to DCA it into Ethereum. Maybe you want to put a recurring buy order out for say $100 of Ethereum each month. That way, if Ethereum starts moving down, you're getting it at a lower price point. And, I think here in 3, 4, 5 years, you'll say, hey, I didn't want to at the time, but my financial advisor was spot on.
This maybe. Or I will just say, please, sir, do you have any spare change?
Maybe. Maybe. I don't know. But I don't know. I'm not sure about anything, but Ethereum, it's not going anywhere. People are going to keep buying Ethereum. People are going to keep using it. It's going to keep being updated. I like Ethereum's bull case right now more than Bitcoin. I like that it's cheaper. So yeah, that's
I think that's what everyone likes is it's cheaper, it's more affordable, right? I'm seeing some good ones in the chat. Maybe I just go diversify this way and just go, hey, buying a little bit of every single one of the largest cryptos on the heat map right there. Buy some Uniswap, buy some Binance Coin, buy some Cardano. Maybe
one of my friends reached out to me and she was like, "Hey, what do you think about Wafer Coin?" And I was like,
and you were like, "Yes."
I was like, "I don't know what that is."
It's delicious.
I looked into it, and it's like a very small altcoin that has been like on the chart on CoinMarketCap and stuff goes back to like 4 days ago, like literally like October 27th. And this, my friend that reached out to me, she's not like into investing or into crypto at all. So she must have heard about it from friends. And I'm like, all right, this has got to be the top of the altcoin mania. And of course, since she reached out to me, I talked to Logan Ross and Ryan McNamara, our resident crypto experts. And they're like, yeah, looks not like a scam, but I don't know. They weren't too ecstatic about it. And I told her this. And I, whatever. And of course, it's up like 150% since she told me about it.
That's a funny story. Let's remember this. What was the catalyst for the very first Bitcoin bubble rocket ship to the moon. It was Thanksgiving 2017. Okay. We saw this happen basically every November, 2017, 2018, 2019. Bitcoin just goes up into during and after Thanksgiving weekend. I don't know why, it just does. So that's in 3 weeks, AB. 3.5. Let's remember that.
Are you saying history doesn't repeat itself, but it often rhymes?
I'm saying if we all buy Bitcoin right now and sell it on Black Friday, we'll make money. No, I don't know. But I'm just reminding you all that this is a thing that happens. And
what percentage of Thanksgiving family dinners do you think cryptocurrency, Bitcoin will become a topic of discussion?
50.
You think half?
Yes. This is a great question from the chat. Let's do a YouTube poll right now. Or you can just put your number in the chat. What percent? That's a great one. What percentage of Thanksgiving gatherings this year in the U.S. are going to talk about Bitcoin, crypto, NFTs in some way, shape, or form? Actually, my 50% now seems low.
I agree, and what I'm curious,
he says 100.
what out of those where it becomes a topic? Like, what percent of the time in that discussion is just spent from like someone our age trying to explain to their grandma, like,
I don't know
what cryptocurrency is? I'm sure that's going to be a frustrating conversation.
Bill says 10%. I've seen 64, 65, 75, 80. Yeah.
I think the mean from the answers we're getting is about 65%.
Mm-hmm.
Yeah. And
boomers love Bitcoin. Yeah, Bitcoin's for boomers. That's exactly.
My uncle's like probably getting close to 60, and he's like texting me about Bitcoin today. He's like, this is around where we were at, where it sold off last time. Like, do you think it's going to do that again? Should I sell? And I'm like, dude, like, I have no clue. No one knows.
All right. There's always that one cousin, 90% master of stonks. Nice. I like it. Hey, as a reminder, everyone, you can get some free Bitcoin. All you have to do is download the Voyager app, enter the promo code ZING, ZING, make your first, fund your account with $100, make your first trade, and they will give you $50 in Bitcoin. There you go, Voyager. Check it out. All right. It is 12:45 thereabouts. Let's keep the train running on time here. Let's bring on our next guest, Dr. Rahul Kushwah. He's the COO of Predictmedix. We broke a headline with him this morning. Let's get Dr. Kushwah on the show. Producer, there he is.
Hey guys,
Dr.
how's it
Kushwah.
going?
How are we doing today?
Good. Can't complain.
Can't complain. Great. First, let's talk about the headline we broke. I believe I forget the time now. It was definitely pre-market this morning. And I will read the headline, and I will ask you to explain to me what I'm reading. You reported on your safe entry station that it received the mark of approval and ISO certification for commercialization in the EU. Explain that in English, please.
For sure. So safe entry stations, first of all, are these gateway units powered by artificial intelligence. You walk through them, they can identify if you're showing signs of COVID-19 or other infectious disease. They can identify if you're showing signs of cannabis or alcohol impairment. And they will also be eventually able to identify if you're showing signs of mental illnesses. So these are screening technologies which you can use to screen a whole bunch of people in a very short span of time. And this morning, what we announced was that we have received the CE compliance and ISO 13485 certification. And these are the primary certifications that you need to break into the EU and perhaps the Middle Eastern market as well. So what it means is that we basically comply with all the regulations that comes to manufacturing and quality control that is needed to really commercialize our technology and scale it all over EU and the Middle East.
So what's the next step here in the regulatory process?
Well, the next step is, of course, we are moving ahead with commercialization in those jurisdictions. And the other point that I would like to really nail upon is, if you look at safe entry stations, we have had some tremendous success here in North America as well, whether it's Super Bowl parties, film festivals, music festivals. And the latest one was Formula One Grand Prix, where we had 15 units installed all over Circuit of Americas. And we had some fantastic validation as far as the utility of our technology goes. And now with the CE and ISO, we are ready to break into the EU market.
All right, so maybe we should back up for a second here and just ask you. You explained it briefly, but we're talking medical devices for screening. Explain exactly what this is, how it works, and then we'll go from there.
Yep. So when you look at a safe entry station, it's really a configuration of multispectral cameras and sensors which connect to our proprietary AI algorithms. So the way how it functions is kind of like a metal detector that you come and stand in front of a unit, and within 2 to 3 seconds, a decision is made, which basically it shows that if you may be showing signs and symptoms of infectious disease, or you may be showing signs of impairment. So if you're talking about a facility where you have a large number of people, it could be an industrial setting, an event, warehouse, this technology can be brought in, and it's all about making sure that you can create these safe workplaces or safe environments where you are quite effectively reducing the risk of any infectious disease to really, take over the facility. And at the same time, the other problem is impairment, if you're addressing through technology as well. And that's in terms of identifying if individual is showing signs of cannabis or alcohol impairment.
So can you talk about your footprint again a little bit? Because we're talking about the European, we're overseas right now, right? So where are you targeting commercialization, and where's your footprint?
Predictmedix, our head office is based out of Toronto. We have signed contracts all over North America. We have been working with some really major players in Asia. And in parallel, what we were realizing was that we were getting actually a lot of queries from Middle East and EU coming to us. And one thing we realized is that if we want to break into this market, we got to have those certifications in place. Now, the other complexity was that what we are offering is quite disruptive. You look at a gateway and by default, you're thinking, oh, it's going to screen to see if I have any metal on me. No, this is screening for diseases and impairment. So it's
how exactly does that work, though?
So using multispectral cameras, what we are doing is we're looking at blood flow across several regions on your face under different wavelengths, and we have been able to convert that into actual symptoms. That could be signs and symptoms of impairment or signs and symptoms of infectious disease.
Okay. It sounds good. Couple questions from our chat that I'm also wondering is about the size of the equipment.
So again, a standard unit is basically designed to fit a doorway. So it's like a doorway that just goes next to an entrance.
Oh, okay. So it's what I'm thinking of when I think of like at the airport, right? Like airport.
Basically. Yep, that's right.
Got it. Okay. This is an interesting one from Randall. As far as getting consent to scan people, but I would imagine this isn't. You're not sneakily doing it, right? Like people know when they're being. This isn't like a surprise. Like we just scanned your brain. Like it's not like that.
No, first and foremost, there is full disclosure, and at the same time, there are no personal parameters which are captured or stored anywhere. In other words, we're basically not even identifying an individual's face. And one of the points that I would really like to nail upon is we're not doing any kind of face recognition. So there is no facial recognition technology that is involved here. It's basically about reading certain parameters across different wavelengths, converting them into symptoms, and in real time identifying if the individual is exhibiting signs of impairment or infectious disease.
So how far are we now from, what is the commercialization roadmap? How far are we from that?
So we've had some great success with tier 1 companies like Indian Oil, which is, again, one of the largest oil and gas companies in the world. It's a Fortune 100 company. And right now, after the successful completion of the pilot, they are evaluating basically a rollout that is going to encompass every side of theirs. And at the same time, as I said, with the success that we had at Formula One, there is definitely a lot which is brewing there. And then there's the whole EU and the Middle East market, which we can now go aggressively after since we have received the right certification. And the other point that I'll add there is, as much as we are talking about these screening technologies to identify infectious disease, impairment, or mental illness, eventually in the long run, we are seeing this as also a triage solution in a hospital. Right now you go in, you sit down with the nurse practitioner, Your vitals are measured, which then go to a physician or someone else, and it's a very long-winded process. What we're talking about is in a healthcare setting, you bring these safe entry stations in as people are coming into the hospitals. In a few seconds, the vitals are measured, monitored, and on the other end, you have AI, which is basically churning out some insights that can be used by the physician as well. So overall, we're talking about turning the healthcare system, which right now is very people intensive, into something which is really being run by some very cutting edge technology, and it leads to huge cost savings as well.
What exactly was the nature of the Formula One? So you had your devices at the track, and they were being used by the different teams. Is that it?
No, so we actually had it at the hospitality suite where they had the VIPs coming in, and at the same time, we had the employees that were being screened regularly by safe entry stations, in particular the catering staff.
Okay, and again, just screening them for COVID symptoms, I would presume, right?
Yeah, exactly.
What is the largest, or maybe not largest is the right word, but what is the opportunity, the use case here? Are we talking like you expect most of your customers, potential customers, will be using this for something like screening for COVID symptoms, or is this more of a alcohol drug situation, or does it not matter? Does it not make a difference?
So when you look at a safe entry station, I mean, that is just the hardware side of it, right? So once you get a safe entry station in, you can be using it to monitor symptoms of infectious disease, or you can be using it for impairment. So with a lot of our clients, they do have the option of switching from one to the other as well. So it's not like that you get a safe entry station in and it's only going to do one thing. That can be switched around anytime.
So let's get to the $1 million question here, which is intellectual property. How much of that do you have? What kind of patents do you have? And can other companies do the same thing?
So far we have filed 6 US patents, and there are some other patents that we are working on. But the approach that we have taken in terms of identifying these symptoms or these physiological parameters is in fact very unique. So just to give you an example, when we're talking about patents in the realm of AI and impairment, based on the prior art search, it seems like ours is actually the first one in that space that covers impairment and how we're using multispectral imaging to capture certain parameters, convert them into symptoms, and then identifying impairment.
How long has this been in the works for you?
This has been going on, I would say, for the past 3 years. And in my past life, I actually used to be a professor at the University of Ottawa.
Good timing on that front, then. If it's been in the works for 3 years, you beat the pandemic by 1.5 years. So very nice job. Dr. Rahul Kushwah, COO of Predictmedix, ticker PMEDF. It was on the screen before. Sir, a pleasure. Thanks for chatting. We'll have to have you back on again down the line.
Thank you. It was a pleasure.
All right. It is 12:55 here. Our next guest will be joining us in about 5 minutes. It is the one and only Gordon Johnson, who is, to his credit, incredibly consistent on his beliefs. He is not wishy-washy. He is not changing his mind. He does not follow the chart. He does not give in. You see all the time people on certain cable news networks will just, they're bearish when the stock is down, they're bullish when the stock is up. That is not Gordon Johnson. He does deep fundamental dives and lets those numbers inform his opinion, does not let the performance of the stock inform his opinion. So we'll talk about Tesla with Gordon Johnson. I also want to talk about steel, because steel is hot right now, and Gordon is also that's also in his coverage universe. So we'll get to that in 5 minutes or so. We'll have Tim Quast on the show at 1:30 talking market structure. I cannot wait to get Tim's thoughts on Avis Budget today. I'm sure he has thoughts. I'm sure.
I have a feeling it'll be rising demand and a limited supply. But Spencer, I've got not a grievance to bring up to you, but a couple days ago on the stream, we were talking about earnings for this week.
Hey, do we have a director here? Can we get Aaron on the screen? What's going on? There we go. Okay.
So a couple, I think it was last week. We'll have to get, I'll have to find the tape and bring it to you. But we were talking about earnings, and I said that I liked kind of a straddle play on Pfizer because I thought, you know, whether it's good guidance or bad guidance, I was pretty sure it was going to move a lot one way or the other. And I think I said 5%. You said, I don't know, Aaron, that's a big move for Pfizer. Well, lo and behold, Pfizer is up about 5% today after the company raised guidance. So yeah, I called that one.
All right. Good one, man. Good one. Okay. You got one right. Congrats. Do I get brownie points for calling out Avis Budget at 195?
You do. That's impressive. I like that.
No, it doesn't matter. It doesn't matter. It doesn't matter.
Well, quick check-in on our live trade that we made earlier. It's the three contracts are up about $15, 3.79%. So we are in the green if I sold right now, which I'm not going to. Very
cool, man. Very cool.
Yeah.
Okay. Something else I want to put out to the crowd right now, and we're going to take notes, but we're doing this show, this midday show, 12 to 2 every day. And Aaron and I don't want it to be where we are. We're over there. We don't want it to be like all the other shows that we do. We want it to be a little bit different. We want it to be more fun, or that's the idea. We want it to be more fun. We're going to bring some interactivity, some games. We just don't know quite what yet. So if you have an idea for, like, I'm thinking, you know, we do like debate segments. I'm thinking we do like trivia. If you have an idea for how we can make this show more fun, maybe a little bit less serious. I mean, we'll still have the guests on, and we'll be serious with them. But if we can just do more silly stuff, I think that's what we're in need of. I think. Drop your ideas in the chat if you have them. I'm going to crowdsource here, or email us at shows@benzinga.com. We are open to it.
Lisa Lee wants more debates. That could be a segment where, what if we book two guests that we know are on other sides of the thing, and we just throw them on the screen and take ourselves out? We like Parent Trap them.
Yeah, that's a good one, man. Cameron Toll, we have the air horn. The air horn is not connected. I will get producer Rahul on that ASAP. We have the air horn. We have the soundboard. It's just not. It's not on the desk right now. I don't know what to tell you, man. So okay, we're getting some feedback on wanting more debates. That's good feedback. We can do that. We can do more debates. Open to it. Chat challenge. Open to that as well. I hope somebody's writing these down.
Yeah, get Ben Shapiro on here. I'll debate. I don't know. We're not going to get political. But all right, Spencer, we do have our next guest here. Mr. Gordon Johnson. I'm excited for this one.
So excited.
Of course, a long-time Tesla bear. So we'll get his thoughts on Tesla. Gordon made headlines yesterday for telling us at Benzinga that he foresees another Tesla stock split at some point this year. Gene Munster, who's kind of on the other side of the Tesla argument,
they agree
on the stock split.
Yeah, they agree on the stock split. It's pretty. Hell must be freezing over.
I mean, I'm sure they have different thoughts about the stock split and why it could be a bearish sign or why it could be a bullish sign.
True.
But without further ado,
we talk so much bullish Tesla on the show. Let's get the bear on, and please help us bring us back to reality, Mr. Gordon Johnson from GL. Mr. Johnson, how we doing today?
Hey guys, how's it going?
Doing fantastic. Please help us if you can make sense of this, or maybe I don't even know. Can you?
I don't think anybody can make sense of where the stock's trading here. I mean, think about this, right? Let's take a step back, right? So if you're a bull on Tesla and you're buying the stock today, right? Think about this, right? The global auto sales this year are probably going to be around, call it, 80 million units. So let's assume in the most wildest of bullish scenarios, the Tesla in 10 years is half of global auto sales. By the way, the largest car maker today, Toyota, is around 10% and has been for some time of global auto unit sales. So that seems to be the peak, right? But when the the first Ford hit the market, when the auto industry just emerged, it was 50% of auto sales. Keep in mind, there weren't a lot of auto companies back then, but I think that's the assumption that some bulls are going with. So you assume Tesla makes, on an operating margin basis, $3,500 per car, 10 years out, and they're half of auto sales. You put an 8 times multiple on those earnings, and the stock is at that level right now. Automotive makers traded 8 times earnings. And when people say Tesla's not an auto company, I think that's just baloney, because if you look at their other 2 divisions, services and other has lost money on a gross margin basis for several years in a row. And their solar division, their margins were basically break even in the most recent quarter. Last quarter, they were modestly positive. And 2 quarters before that, they've been negative. So they've made both of those divisions hemorrhage money. They don't make money there. So if you want to take the most wildest of bullish assumptions, Tesla's stock price today assumes that, which we think is not going to be the case. So let's talk reality, right? Tesla sells 241,000 cars in the third quarter. Toyota sold 2.7 million cars in the second quarter. Yet Tesla's valued at what, 10 times Toyota? So the question is, what's the expectation on incremental sales growth in the fourth quarter? And the answer is Tesla grew their units 41,000 units in Q3, and the expectation is they're only going to grow them roughly 13,000 units in Q4. So they're selling 241,000 cars. They need to get to millions of cars sold per quarter to anywhere near justify even a third of the valuation. And yet the street is modeling, or the people who understand how to model this company are monitoring their unit sales to drop from 41,000 incrementally to 13,000. So you're going to need a lot of quarters to get to 1 million cars sold. So the valuation is just ridiculous. But I think that, what Gene Munster and the Morgan Stanleys and the Goldman Sachs who love this stock, even at these levels, basically assume is that, Tesla and all the other EV makers in the world have an infinite and, significantly growing total addressable market, or TAM, whereas the OEMs who have been doing this for 100 plus years, they can't apply that same logic. So somehow every single EV maker in the world is just going to grow massively, whereas all the other auto OEMs who know how to make cars, have been making cars for 100 years, are going to somehow disappear. And that's just, I think that's just hocus pocus. It's just magical thinking that isn't real.
Very appropriate reference for the time of year. But I think what's also weird is look, it's not unusual for a stock to trade away from its fundamentals for a period of time. We're seeing it today with Avis Budget. A lot of stocks don't trade off their fundamentals, and they become a story and they get hot. And without exception, or with one exception, they almost always come back down to earth in some way, shape, or form. AMC came back down to earth in some way, shape, or form. GameStop came back down to earth. Tesla never really does that. It never really comes back down to earth. At what point do you just throw up your hands and say, "All right, I'm done"? I mean, this is, I don't know. I don't know. I don't understand it. It doesn't make sense, but it doesn't make sense. That's the way it is. I mean, at what point do you just kind of throw your hands up here? Because I agree with you, but it's so hard to argue against the bulls.
What do you mean? Hard to argue against what? I mean, if you're just going to say the stock price just keeps going up, I mean, you could look at a number of, of the coins and say, the price is going up, so we'll just keep buying. Listen, I'm a fundamental analyst, which is why the comments that are being made by other analysts, I think are downright, I don't know how else to say this, misleading and shocking. I mean, you don't say a thing's going up, so I'm going to throw up my hands and say, well, fundamentals are out the door, nothing matters. Listen, let's talk facts here, right? Again, China, where there's real automotive competition, Tesla's market share has went from 23% to 12%, most recent quarter. Europe, where there's real competition, Tesla's market share has went from 33% to 12%, most recent quarter. The U.S. hasn't really even seen competition. Tesla's market share has went from 86% in the first half of last year to 66% in the first half of this year. We're going to see real competition in the U.S. next quarter. Look, Tesla needs to show tremendous growth next year. They have no new models coming. There's tons of competition coming in. And for everybody that says, hey, you've been saying that for a while, yeah, the numbers are proving out. We said their market share is going to drop. Everybody said their market share wasn't going to drop. Their market share did drop. They need to grow units massively. Their unit growth last quarter 41,000 units. If Ford or Toyota or VW's units grew 41,000 units in a single quarter, no one would even notice because it would be a blip on the millions of cars they sell per quarter. So for Tesla's unit sales to grow 41 and then drop to 13 incrementally a quarter, that's a big problem. So I think that you need to consider that. And I think that next year, as that unit cell growth disappoints, next year as their gross margins actually start to fall, I think it becomes a problem. And let's not forget about the 800-pound gorilla in the room, right? Tesla said they had funding secured. That was not true. Some would call that securities fraud. The SEC took up the case. Elon Musk last week tweeted out that, hey, the cars that we have with Hertz, they're being sold at retail, not a discount. And then today he says they have no contract. One could argue whether that's also a violation. But if he's willing to do that right out in the public, we have a lot of questions around their accounting that we haven't been able to ask. How are their warranty costs per car going down? How, when they ramp a facility in Shanghai, do their operating expenses actually drop? Why is their receivable balance constantly going up? You look at this company, for instance, from a cash flow perspective, excluding the increase in payables and accrued expenses over the past year, their free cash flow would actually be negative. So their core business still does not make money. All of their money made is from customers extending them terms on payments. So again, look, I know the stock is in a bubble. So what you're saying is when something's in a bubble, just keep buying on the way up. That's how you lose every single dollar you have.
I didn't say that. I didn't say that. AV, go ahead.
So Gordon, so we have this, Tesla Q community, people that are short Tesla don't like it. One of, at least on Twitter, kind of the big names in this, it has a Twitter account called Tesla Charts. And I've been following them for a while, and they seem to post good DD and good research. And a while ago, I think it was like pre-split, whoever's behind the Tesla Charts account essentially said, all right, look, if you can't beat them, join them. I'm done shorting Tesla. I'm going to buy a few shares or whatever it is. Have you hit that point yet? Or are you still with your own money shorting
That's
Tesla?
what I was trying to get at. He asked it better than I did.
So number one, there really isn't a Tesla Q community, right? You look at the short interest in Tesla stock. At the peak, it was around 25%. Today, it's at 3%. There really isn't anybody short Tesla, which is my point as to at a $1,200 stock price, what's being priced in is that they're half of global auto sales at a $3,500 per car or $4,000 per car margin. That's priced in at these levels. So when you're buying Tesla today, you're literally buying it with that assumption being made. With respect to throwing in the towel, again, short interest has went from 25% of the float to 3%. There's really nobody short Tesla anymore. So there is no boogeyman out there of these short sellers coming to kill Tesla. But when you're the Tesla community, you like to create this boogeyman. With respect to your question, I can't invest in stocks I cover, either long or short. So I can't directly being invested in a stock I cover. That's the policy of my firm. So no, I'm not directly invested in Tesla, but I think Tesla is going to be one of the biggest blowups of all time. So I'd highly caution your viewers and listeners to be very careful about just buying bubbles on the way up, because bubbles do pop. Tesla's 1.3% of global auto sales. They're valued at more than 50% of every automotive company in the world, right? So they need to be growing sales by millions per quarter to even justify half of where they're trading at. And their unit sales growth per quarter is actually slowing, not improving. So I think that, we need questions and answers around that. Again, I think the accounting is very important. Look, regulators are asleep at the wheel. There's no doubt about that. So, people can use aggressive accounting and it doesn't seem like anybody's going to come question that. But as to the fund managers invested in this stock, I would ask them, the ESG investors, if the Tesla CEO is willing to say funding secured when they didn't have funding secured, if he's willing to put out a tweet saying
that was messed up. That was messed up.
Right. But my question is, if they're willing to do that, how do you trust the numbers that nobody questions them on? Their accounting. I think that's a key question that some of these guys are going to have to look inward and answer.
Gordon, I had to say that I think you're the boogeyman for the Tesla community. But because you're definitely one of the most vocal critics. What is your perception of how other automakers assess the accounting at Tesla? I'm sure you have these conversations with other people in the industry.
I've had this conversation with a number of auto analysts and automobile analysts. The problem is when you talk about like a Gene Munster, not to call him out. We do debates a lot. I like G Mustard. I think he's dead wrong on Tesla. I think he's ignoring things that are in plain sight. But when you talk about some of these, a lot of the analysts covering Tesla are technology analysts, so they don't know much about the automobile industry. When you talk to auto analysts, I mean, they will tell you point blank, Tesla is allowed via U.S. regulators to get away with things that other car companies simply aren't, from an accounting, from a regulatory, from a securities perspective.
Wait, why is that? Is there like an actual reason for that, or besides just
nobody knows? Nobody knows why. You know, these guys are able to do this Hertz thing, and nothing happens. Nobody knows why. You know, they're able to pre-pick who's allowed to ask questions on their conference call. Thus, they never get asked about your receivable balance. How are your operating expenses going down when you have a new plant? How much of your cash is actually in China you can't bring over to the U.S.? How do you have billions of dollars in cash, yet your interest income is actually not going up to justify the billions of dollars of cash you have on your accounting statements? How is your warranty expense going down with more cars sold and all the problems with your cars, and on and on and on? Why isn't NHTSA doing anything about, you know, Tesla testing, you know, technology on roads where, you know, it's potentially putting people's lives at risk? What about the NHTSA report where they said that Tesla's autonomous driving was safe, but then we later found out of the 5,000 miles that were supposed to be tested, I think only like 400 of them were verifiable. That complete test was basically shown to be extremely biased. That's a lack of an understatement in favor of Tesla. These questions just aren't asked, so we just don't get answers. But I think that as, you know, as the numbers start to roll out next year and they lose share in the U.S., and keep in mind in Q3, right? How many cars did they sell to Hertz? Financially delivered. That's what they call it, financially delivered. How many cars did you financially deliver to Hertz to boost those U.S. numbers? Because all the data we see in the U.S. does not support the big increase in Model 3 sales that our data suggests that is in Tesla's numbers. You know, what happens in China next year when there's no new cars, right? Keep in mind, in China, in the third quarter, they introduced the Model Y SR Plus. That was 20% lower in cost than any other Model Y. So there was a backlog of those cars that they sold in China. What happens in the fourth quarter and all next year when there's no new cars? What happens in Europe next year? There's no new cars, all this competition. You know, I think that there's some, you know, big red flags in the horizon. And keep in mind, going back to the Hertz news, you had Tesla insiders sell like $600 million worth of shares after that news was announced. You know, is the SEC going to look into that? I don't know the answer to these questions, but I think there's a lot more red flags than people would like to admit. And to continue to justify a valuation that suggests Tesla's going to be 50% of global auto sales at a $3,500 to $4,000 operating margin per car, I think is just ludicrous, for lack of a better word.
Well, there's a million reasons to sell shares. I think if they had known it, they wouldn't have sold it if they had known it was going to go up like that. Gordon,
I know they sold after. They sold after the news was announced. So after the Hertz news came out,
if they hadn't sold at all, they would have made more money. Is my point. I'd be remiss not to ask you, Gordon, about steel, which is your other area of coverage here. It's been in focus the past couple weeks. Yesterday, we get the headline out of the UK and the US pausing the steel tariffs and aluminum tariffs. Give us your sense on the state of the steel market right now, because it's been in focus.
Right. So we've been saying that in between earnings, things could be volatile, but around earnings, things are going to be good. And let us put this U.S. news into focus, right? The U.S. EU news. The U.S. effectively said, we're going to allow, 3.3 million tons of steel into the U.S. From Europe. And then the rest of us, then we're going to, re-implement tariffs, 25% on steel, I think 10% on aluminum. 3.3 million tons of a 100 million ton market annually is inconsequential. It's insignificant in our view. So I know the stocks are trading off on this. We got some questions. It's only 3% of U.S. demand. We don't think that's going to be a big deal. If you also consider that SDI has continuously delayed their new EAF plant, and there's been other delays due to, as you would expect, supply chain issues, labor, etc. And then you consider in our most recent checks done in the steel space, we're hearing actually that underlying demand next year is actually shaping up to be better than expected. There was a Fence conference in New Jersey last week, and everyone there is saying that they've never seen demand this good. So the assumption in steel is that demand's going to go back down to pre-COVID levels. But what everybody is seeing is not only are they seeing strong demand, but they're seeing a willingness to pay higher prices due to inflation expectations. So I think that still actually could surprise to the upside. U.S. still demand could surprise to the upside next year. And what we keep in mind is against that backdrop, however, you have weakness in China. And if China starts to really shoot those exports into the market, that'll be a headwind against the tailwind we just described. But I think overall, given the way the pricing contracts lag for the steel mills, I think that the earnings are going to be very strong. And I think when you get a tech sell-off, if you get a tech sell-off, which I think you will get at some point over the next 3 to 6 months, I think that money is going to rotate into inflation/cyclical plays. And I think the steel stocks are positioned quite well there.
See, he's not just bearish everything. He can be bullish too. You just got to get him off Tesla. And then look, Gordon Johnson, I love it because he lets the fundamentals do the talking. He's the founder of GLJ Research, joining us today on Benzinga Live. And Gordon, we appreciate the time always, and we always get people fired up whenever we have you on. So thanks for coming on today. Appreciate your thoughts and your candor, and we'll be in touch. Thanks a lot. Have a good one.
Absolutely. Thanks for having me. Take care.
And someone in the chat was making a comment on on all the press that Gordon gets. I just looked this up just now. Gordon has not been on our channel since March. Okay, since March. It's been 8 months. Where are we over there?
And that was after Kathy Wood, who of course is a huge Tesla bull. So it's nice to get both sides.
Yes.
And we're here just reporting on it. So we're not. Well, actually, I am a Tesla shareholder. But
wait, do you own the stock?
Yeah,
I'm long, but I don't own the stock. I just it's in a few.
Oh, any ETF.
It's in a few ETFs that I've got.
But
so
I got not in trouble, but a lot of the chat got mad at me on this show a couple months ago for raising questions about like how many times Elon Musk has essentially overpromised and underdelivered. And
a lot.
I think I'm allowed as a shareholder to say, hey, yeah, that bothers me. That bothers me that if you're going to say one thing and then that doesn't come to fruition and there's no consequences whatsoever. And in fact, I think it's the opposite. I think he's said these things time and time again with no repercussions to the point where it doesn't matter now that he can say something and it's like, oh yeah, that might come true. It might not, but it's like, it's happened so many times that it's just not a big deal. Whereas if a CEO of another big company said, oh yeah, we're going to do this by X date, and then that doesn't happen, that'd be a very bad sign for the company, but not Tesla. So I am a shareholder. I am long, but that bothers me. And I think as a shareholder, I have the,
Yeah. And that's totally fair. And look, if all you want is for us to bring on people that agree with you and agree with your point of view, I don't know why I'm not on camera right now. If that's all you want, then hey, we can do that. It won't be as good of a show, but we can do that, or maybe go watch someone else, right, and go watch a show like Matt Kors where they all just reinforce, everyone's bullish ideas, and that's all fine, right? And everyone can just live in the same echo chamber where yes, we all agree everything is fine, we're but that's not what I really care about. I don't really care. I'd actually rather hear from people who don't agree with me. I would rather hear from people who directly disagree with what I believe, because it makes me think and it keeps me honest, right? I already know what I think. I don't need people to tell me to reinforce what I already think, right?
Well, that's the thing, Spencer, is Tesla, the stock, and Elon Musk in general are so polarizing,
right,
that you're going to have your, confirmation bias. So if you're long Tesla, there's a million reasons why you're long Tesla, why you should buy the stock right now, even at this crazy price. If you're short Tesla, there's a million reasons to sell, a million reasons why the stock's going to go down. And I try to just stay in the middle. I listen to both sides and I say, yeah, I do think maybe the valuation is quite ridiculous. I do see the long-term potential for this company and why people love it and why people love Elon Musk. And I also see why some people hate him. So I try to stay very even keel with this, because I think if you're on one side or the other and you're just seeking out information that confirms what you already believe, you're not going to be in a position where you're open-minded, able to make informed decisions. So I think we should continue bringing on, I guess, contrarian viewpoints. And if you don't like it, let us know.
But and also, I think the biggest takeaway here is Gordon Johnson, lives and dies with the fundamentals. It is fair to say that is but one tool in the toolbox. If you live and die with any one thing, be it fundamentals, be it the technicals, whatever, then this can happen to you, right? Because there was way more than the fundamentals at play here. He acknowledges this. We all acknowledge that on Tesla. I tried to get him to kind of say, like, have you reached your uncle point yet? Because
that's what I basically asked him that.
You asked it better than I did. I mean,
But he's
if it were me, I would have reached my uncle point hundreds of dollars ago. So
I know, but like he said, he's not actually like financially short the position.
But it must be like he gets.
Well, and that's the thing is people were saying in the chat like, oh, he gets aggressive, he starts foaming at the mouth when talking about Tesla. When I think he's very composed talking about it, considering the backlash that he's gotten on his viewpoints on Tesla over the past 2, 3, 4 years. I mean, the Tesla community, the bull community of Tesla absolutely eviscerates Gordon Johnson time and time again. And the fact that he's able to get back on camera,
props to him, man. Seriously.
Yeah, I mean, I think it's admirable.
The amount of abuse that he takes, I could not handle half of that.
Right, exactly. I mean, I saw a glimpse of it when all I said was that, yeah, Elon Musk has, and it was funny because Luke and Raz were on the show with me, and Luke asked for like, he was like, oh, when has Elon Musk done that? And Raz, who's of course like a big Elon bull, was like, yeah, no, Aaron's right. Like Elon Musk has definitely done that.
He's done some shady stuff. We can all agree about that. The funding secured was shady. The Solar City, that was shady too. Okay. He's done some shady things. It doesn't matter as far as the stock is concerned for whatever reason. That's just the way things go. And you can't fight the trend anyway. Yes, he has been wrong. He has been wrong the entire time.
Yeah. And I mean, it will be if his hypothesis or prediction comes to fruition and we do see the blow up that he's calling for, he'll be able to say, oh yeah, look, I was right. But then on the flip side, you'll say, yeah, but you were wrong for 4 years.
More
and
than that.
Whatever. So I don't know. I mean, at that point, even if it does come to fruition, you could argue, yeah, you were,
why do people call stock market tops? People call tops in the market every single day. Oh, we're in a bubble this, we're in a top that, and they do it for years on end, and they're usually wrong. And every 10, 15 years, they're right because the market has a correction.
Well, that's what I hate about the like gold bug inflation nuts is they're always saying like, oh, inflation's so much worse than it's reported. Yep. The CPI data is not legit. Like they're putting out fake numbers. And then whenever there's an uptick in CPI data, oh, now finally those numbers are legit and they're reliable. I mean, no, I'm not kidding you. We had Peter Schiff on and I asked him about the CPI and he said, those numbers aren't real. Don't look at the CPI. And then a week later, the CPI came out and showed inflation and he was tweeting about it. Look at the CPI. And I was like, wait a second, you just said those numbers aren't legit. So just because I don't know. I mean, there's that guy, the guy who wrote Rich Dad, Poor Dad.
Robert
he's calling for a stock market crash every single day.
I want no part of that. I want no part of that. Hey, let's do our contractually obligated look at Avis Budget Group. How are we doing today? 334. All right. We bounced. Let me see. Let's get a chart up on the screen. We bounced a little bit off of 334. We have to look at the stock. It's a wall now. We have to look at the stock like every hour, every half hour, because that's the way things go.
I want to do some digging into like the psychology of bubbles and like the makeup of them. I honestly don't think it's
so interesting.
I know. I think it's really interesting. I've like dabbled in it before, but I haven't done like deep research. I honestly don't think we're in a like stock market bubble right now.
Well, we're in a bubble supported by the Fed. We're in a money printing bubble.
Yeah. That's fine.
That's fine.
I just wish we got more direct stimulus checks.
That's fine. We're in a money printing bubble. Because it's not our problem. It won't be our problem. It'll be our kids' problems, probably. So
yeah, but I don't even think you can say that definitively. I mean, there's a lot of experts out there that go on, modern monetary theory that say like, hey, look, we won't get this huge inflation or debasement of currency that a lot of people say for. But it's all a theory. So
that's true.
Who knows what's going to happen?
I thought MMT was proven right, and then we got this inflation, and now I'm not so sure. So.
Well, that was my biggest problem when everyone was talking about the rising inflation, which we talked about this earlier with the rental cars, is when you dug into the inflation, it wasn't like widespread. Every single good is up 2.5%. It was like certain sectors were driving the inflation higher. Now you are seeing, whether it's items at the grocery store, whatever it is, that are getting more expensive. So there certainly is inflation, but the idea that like, oh, gas prices are super high right now because of inflation, lumber prices were super high everyone that was talking about lumber prices and inflation have been dead quiet as lumber prices have completely plummeted. If you pull up a chart of lumber prices right now,
I'll do it.
You're going to tell me that that's because of inflation. And everyone and their mama was talking about, lumber prices.
And their mom
was talking about lumber prices are going up because of inflation this, inflation that. And then what happens? The supply chain issues kind of fix themselves in the lumber. Yeah, but that's not an actual.
No, but you can just look at, boom, that guy right there.
Here, I'll find a better one.
All right. My mom was not talking about lumber inflation. I don't know what your mom was talking about. But
no, neither was mine. I retract that statement.
It's fine. Okay. Anyway, hey, it's 127. We haven't begged for likes in a while, so if you want to be so kind, hit that like button. We appreciate that. Shelly is still long tulips. Yo, Shelly, if you hold long enough, we saw this with Avis Budget today. If you held for 23 years, you got your money back. So I'm just saying.
Tulips, that's a good bubble
reference.
We can look into the psychology of the tulip. What about Beanie Babies?
Again, if you hold long enough, we have seen in this market, you can make your money back. That's not investment advice. That's just observational advice.
All right, wait, my thing's being buggy.
Things being buggy. All right. Anyway, hey, it's 127. We're gonna have Tim Quast. I can't wait to get Tim's thoughts on Avis today. We'll have him on in a couple of minutes here. In the meantime, I want to make sure there was nothing else. Oh wait, there was something else I want to hit on. If you didn't see this earlier today, I'm gonna bring it up in the Benzinga Pro. Give me 1 second here while I fix my layouts because layouts are all kinds of messed up.
Look how beautiful those fall colors are behind us.
Oh my God, aren't they amazing?
We get about 2 weeks of this until it's gonna be snowy.
Oh, dude, I got an alert today about snow. I was like, geez, mother. Anyway, okay, OLB is what I'm trying to bring up here. Let's bring up the chart.
I was really dumb. So 2 nights ago, the Vikings were playing the Cowboys on Sunday Night Football.
Okay.
And they like start the broadcast and there's snow falling. I'm like, holy shit, it's snowing in Minnesota right now. They're inside in a dome and just put some like fake snow out there.
That's fine. Okay, if you missed this morning, we talk about Benzinga Pro all the time. It's our real-time news platform. It pays for itself. And today is an example of where that happened. Okay, so I'm going to go to a news feed here. And I have this filtered by all of our exclusive headlines. And you can see here, I'm actually going to get rid of that filter. And I'm going to do a keyword search because it's easier, or a ticker search because it's easier to look back. But in real time, you would have seen this. It would have been obvious. OLB, we had a headline this morning, 9:15 a.m. Eastern time. They announced their support for MasterCard cryptocurrency processing, 9:15 and 4 seconds a.m. Eastern time. Let's go to the chart, and you can see exactly when that news broke. Let's go to a 1-minute chart. Exactly when that news broke, because the chart blasted off. The stock did right there. Immediate blast off to over $8. We got to how did we get to? We got to $12 today. We got to $12.80 today in OLB. The headline was exclusive to Benzinga Pro. Our subscribers got it first. It was squawked out. If you didn't read it, you could have heard it. And you had this opportunity this morning to get into OLB. In the pre-market session, get in at 8, or not even 8, get in at 5, 6, 7, sell it at 8, 9, 10, 11. It paid for itself today. Benzinga Pro did in OLB. So I wanted to put that out there. These are the kind of headlines and movers that we have on the platform, and you can get it yourself. Just go to pro.benzinga.com, get a free 2-week trial if you don't believe me.
There you go. I did send you the actual futures chart of lumber. I don't know if we want to go back to that topic real quick, but essentially my point was just that people were attributing the rise in lumber prices to inflation when there are a lot of things that can contribute to rising prices. When Tim joins us, he will be talking about supply and demand. That primarily is what causes rises and dips in prices. So to say, oh, gas prices are X high because of inflation can be part of it, but I would not say it is completely true. But yeah, I mean, funny how often we were talking about lumber prices a few months ago, and today, no more lumber. No one's talking about lumber. So I don't know what's going on with the supply and demand of lumber, but the price has certainly
It's true. Okay, hey, and reminder, I'll put the link up on the screen. pro.benzinga.com. Where is my link? I don't even have it. I'm gonna have to do this. pro.benzinga.com. There it is. Check it out. Free 2-week trial. No credit card. We will not hassle you, but I can't promise that we won't like sick Aaron Bree on you.
What, for a free trial?
For it to up your trial to your subscription. I don't know what I'm trying to say.
Well, speaking of free trials, if you're interested in market sentiment and supply and demand of certain stocks,
I am.
We do have Tim Quast, who is joining us from Market Structure Edge, which is a great place to get those insights as an investor, as a trader. And if you haven't already, you can sign up for Market Structure Edge with a free trial. I believe maybe you put Benzinga in there or something, but I'm sure Tim can...
or something, yes.
We'll see. Tim will let me know because he knows more about this than I do. But let's go ahead and bring Tim Quast on the show.
There he is. Tim Quast. Good afternoon, sir.
Uh-oh. The old mute trick.
We can't hear Tim. Producer, fix this. Producer Rohan.
It looks like he's not muted, but... maybe his microphone isn't connected.
Tim, check in the settings of camera and mic and make sure your correct microphone is selected.
All right. Well,
so you see the cam and mic little gear bar down on the bottom of your screen. Click in there and make sure the right mic is connected. Otherwise, you can try just closing your browser and coming back in.
Let me give it one more try.
Oh, hey, there we go.
Hey.
What's up, Tim? How we doing?
That was very good tech support, AB. I followed that perfectly. So thank you.
Maybe I should change my job title. AT, I'm coming for you.
Tim, we got to start with Avis here. We got to start with CAR.
Okay.
Can you look up for us, please, the market structure sentiment in ticker CAR and tell us what you think happened? Well, we know what happened. Why you think what happened today in Avis Budget Group. And don't say there are more buyers and sellers.
We never use that phrase because it's not true. It's not really how the market works.
True.
So let's see here. You should see my screen, right?
Yep.
I think so. And thank you for that nice plug at the beginning, guys. It was very, very kind of you. So let's see here what's going on. And for those of you who are new to market structure, holy cow, look at that.
I've never heard Tim say holy cow before. That was fun.
First time for everything.
Yeah. Usually I'm spouting something like a Mark Twain quote, like, hang on to your illusions because once they're gone, you may still exist, which is a great Mark Twain line. So I don't know what happened in CAR today, so you'll have to fill me in. I can tell you what supply and demand indicate. So
yes, please.
Well, so CAR has been a 10 for 27 of the last 30 days, which is extraordinary. It's very unusual. So what I'm looking at here, so see how this is banging the ceiling from a sentiment standpoint. It means there is massive excess demand. And so then you look at the supply side, which is short volume. This is the supply chain of the market. Again, I was saying, for you folks who don't know market structure, there are rules that govern how stocks trade and why there are 100 shares of them available all the time. And that's kind of what we're measuring here. And so what happened today? You guys will have to fill me in, and then we'll look at the data here.
What happened is last night they reported earnings.
Yep.
And today the stock decided to go from 270 to 540. Just because.
So here's the reason. You can absolutely see the reason why. And number one is that 27 days at 10. And then number two is look at even though short volume is very high, the supply chain has been surging to meet the demand for CAR. It's a meme stock, and this is how the market works. Market makers may create stock. It doesn't matter how much of it may or may not be available to borrow. The question is, will Citadel and Jane Street and Hudson River Trading and Quant Lab and so on create enough of it to meet the demand? And look at this steep drop. So if you have demand that is still just caroming into the ceiling and then supply drops, what is likely to happen to price? Well, it's likely to rise, and it will rise to whatever level that market makers are willing to continue to create shares to satisfy. And to put this in perspective, the reason I said holy cow is I don't think I've ever seen a stock spend 27 straight days at 10. This is one of my favorites, which I currently own, Zscaler. Look at that. That's a dozen days. And I will go purposely seek these out. I want to find falling demand or falling supply and demand that is right at the ceiling. Well, this is 12 days, and it's very unusual. Yes.
Tim, if you were watching CAR on Market Structure Edge and you saw that it was staying here at 10 for day in and day out into earnings, is that a sign to you that this stock could blow up after earnings, or does earnings kind of not really play into it as much?
Well, sure it does. Sure. It goes to some of the reasons why these conditions exist. If I looked at this right before results, so I'm not crazy about buying a stock that's spent a lot of time at 10 because maybe the gains are baked in. But if you see a steep drop in short volume, well, that's a strong indication the stock could rise. It tells us that there are long bets. If short volume was 71%, that means that 7 out of every 10 trades in CAR it involved borrowed or created stock. It's very much like the Federal Reserve creating dollars to buy US Treasuries to increase the supply of currency in the market, so we all go out and spend it and chase goods with it, and the price of goods goes up. And the price of real estate goes up. Why would they do that? Because your balance sheet then is stronger and you feel more confident as a consumer. There's a purpose and a reason. Well, it's the very same thing. That's what's happened here. So there's excess liquidity chasing those goods. Then the demand doesn't diminish and the supply does. Well, there's going to be a period where the stock could surge. Can you absolutely predict that? Well, you could look at the classic meme stocks back at the early part of the year in the very same conditions. But, Spencer, I had not seen GameStop or AMC or Context Logic, Wish, or any of those spend 27 days at 10. It is something we track. We track how much time stocks spend at 10 because that's momentum stuff. So the surge is dramatic, and it's illustrative of how maybe useless the halts, the trading halts are. We've talked about those before. I mean, if the stock isn't supposed to trade outside a normal range, how is it possible for the stock to more than double in a day? Well, it goes right up to it, waits for the bands to adjust, goes up again, waits for the bands to adjust. And who's doing that? Those people who are very well informed about market structure, the market makers. But that's extraordinary, very extraordinary.
Yeah, more than one extraordinary thing happening here in Avis Budget, and if you're looking at the options chain and you saw the highest strike was 260 and you saw the stock at 540, you thought, what is going on? But that's the way I think. Yeah. I guess Brendo is bringing up a good point. I mean, how I guess if you've never seen a stock hug 10 like that, I guess shouldn't you have seen it though? Shouldn't we have seen this?
Well, you would have to be screening for it.
Right. I guess you weren't.
Right.
Yeah.
Right. So and could you see this? Well, yeah, you could see the setup. Let me zoom this in because I think this is a beautiful example of an extreme departure between demand on the top. So if demand goes screaming into the stratosphere, and down below, short volume was massive. It was actually 85% of all stock at September options expirations. And then it collapses all the way down to 50. That's a reduction of 50%. Well, why does that matter? Because options expired right there, Spencer. So that told us right there that everybody shifted long. Well, that's going to propagate through all the limit order pipelines that the high-speed traders buy. So could that be seen? Yeah, and we're working on that stuff. When we get that figured out, where we can peg those things occurring. In fact, I was just talking with our data scientists last night about this, that we could look for standard deviation surges between demand and supply and isolate these. And so that's what we'll try to do. But you can see it there. That's one of the most extraordinary, the opposite moves in demand and supply that I've ever seen.
Yeah, pretty wild stuff.
It is.
I want to actually no. This is down here. This is a good question for Tim. Actually, from Solar. I'll bring it up on the screen. How significant of a role, Tim, do you believe retail traders have in the dramatic movement of meme stock? In other words, is it really market makers using retailers as a smokescreen for their activities?
The short answer is yes. How significant is it? Well, we measure that data. We measure the percentage of trading volume coming from the consumers of retail order flow. So there are retail traders using an online brokerage firm who will, in most cases, there's a Wall Street Journal article out yesterday. In fact, it's on page A1 of the print version. And those folks will buy retail order flow. And we can see changes in that consumption pattern. And here's how we think about this. This isn't data that we know we focus on externally, but we certainly observe it internally. So if I look at Zscaler here, for instance, here's the constituency that buys retail order flow. And notice is 52% of trading volume. So if we see a surge of 10 to 15% in that, that's a great indication. Here's the truth about retail order flow. So less than 2% of retail order flow actually makes it to the market. Some of mine does, because I know what I'm doing. No market structure. I'm not condescending.
Orders. Yeah.
Exactly. You can get some of your trades to the NYSE, but I'm telling you, not 2% of my trades make it there. Almost all of it. I did 4 or 5 trades today. They were all internalized. That I can see that happen. So what will happen is that for every one retail trade, there will be roughly 10 high frequency trades. So it is a multiplier effect. So if there's a surge across the 100 million online brokerage accounts in the United States by 5%, it can absolutely explode what happens in the stock. But it is a multiplier effect. If I put in an order for 200 shares, that trade is going to be split into 4, 5, 6, 7 pieces. There's your multiplier. And high frequency traders only care about one thing. They're not going, oh, is that price the right price for a stock? They don't care about that at all. They say, can I make a 1/10 of a penny or a 1/2 of a penny? That's all they care about. And they're going to see all of the order flow coming from all these different parts of the market. And they'll say, based on that supply demand equation, I'm taking a 1/2 penny all the way up till I take a 1/10 of a penny. Now I'm not taking any. And the whole thing tips back over and goes down the other way. But that's what you see happening. You're seeing the multiplier effect that high frequency traders can create out of buying retail order flow and turning around and selling it in pieces at higher prices.
Didn't I just see a headline? Hold on, I think I did like 2 days ago.
Yep.
I'm gonna find it for you right now.
Alex Osipovich and Gunjan Banerjee at the Wall Street Journal. Know them both.
I don't want to butcher this. And it was HFTs. This is according to a study at IBSIS World. High frequency trading industry revenue has fallen from $22.6 billion in 2011 to $6 billion this year.
Yep. Yeah, it's much more competitive. Yeah. So
but we just talked about but it doesn't. We just talked about how the retail is contributing to this environment. Theoretically, shouldn't they be making more money?
They make smaller pieces. So what happens, Spencer, is that is back in 2011, and we first saw this as a firm on the, not market structure edge is new. It's the technology behind it is not. But back in 2006, so this is right after the implementation of regulation national market system. That's what created the market maker model for the whole market, which means every single dollar is intermediated. So back then, we were running data for Intel, traded 1 billion shares a month. And Goldman Sachs was about 56 million shares of that monthly volume. And then there was this firm called Octeg, OCTEG, that was driving 330 million shares of over a third of all of Intel's volume. And we said, who the hell is Octeg? And we started rooting around through regulatory filings, and we found a suite number in Chicago that was, and it's a great story because it's a good lesson for you traders. So we found this global electronic trading company in a suite in Chicago that was the same as the one for Octeg. No phone number, you couldn't even call them. And so then we got it, that global electronic trading company was Getco, and Octeg is Getco spelled backward. And it was eye-opening for us because brokers always want to know, they want people to know where they are. They're advertising volume. They want you to come do business with them. And here was this firm that didn't want anyone to know who they were or what they were doing. And we called them coupon cashers, as we learned. They learned that they could go earn rebates, a trading credit at the exchange, simply by furnishing shares for sale. It was the beginning of the process. Now, how does that relate to the $22 billion of revenue in 2011 and $6 billion now? Well, they were so far ahead of everybody that they were making money hand over fist. They were just crushing it everywhere. Well, then JP Morgan and Morgan Stanley and Citi and Merrill Lynch and Credit Suisse and all those firms got a lot better. They changed their technology. They became much more sophisticated, and they stopped getting gamed to the degree that they were back then. So it's a highly, highly competitive business. Now, interactive brokers might internalize my trade rather than sending it out. That means it doesn't get intermediated to the same degree. I try to do that as much as possible. I know they're going to take the other side of my trade and nobody's going to sit in the middle. Well, that has reduced the returns, but the best, the most profitable business on the planet for high frequency traders is buy and retail order flow.
Fair. Yeah, I guess competition is the summarize that entire thing in one word is competition, and 2 words to increase competition. Yeah. Okay, Tim, what are there any other stocks, other sectors? You brought up Zscaler, other stocks on your radar here that you're watching for this week or next?
Yeah, there absolutely are. And I want to look at one thing here related to Avis too, because I just want to finish. I'm going to put a little bow on that if we can. I think I might have them in this transports group, and I'm just going to make sure. They should be at the very, so there they are. So I just want to go over here and find out who's the lead behavior. At the moment, interestingly, it's passive money. That would be quant funds. So quant funds that are very good at so there'll be Millennium's quant arm. They've got a big quant operation. Those are hedge funds. They're the ones who are going to know the data, how the data is playing out, and they played that just right. But I was curious. And then notice this. Here's the high frequency traders, fast traders for Norfolk Southern, CSX, and UPS. I'm just pointing out there's that behavior. That's the behavior that's going to know where the flows are going. Okay.
The quant funds being your leading behavior. As you categorize it, and how far back are we talking here?
Just a week. It's going to be week over week rolling patterns. So it's going to show us those changing patterns. It's just it tells us that behavior has increased.
Okay, so what you're really saying is over the last week, as far as who is trading Avis Budget Group, it's mostly, not entirely, but mostly computers trading with other computers for the last week. Not today, clearly. Not today, but in a normal market, last Friday, for example, or even yesterday, for example, It's computers trading with other computers, and that's what makes up the majority of the flow in Avis. Got it. Okay.
Yep.
So what else is on your radar here?
Okay, so there are two things that we're thinking about right now. And by the way, guys, listening to this, you can know all this. If you're using Edge, you will be able to see the supply-demand changes in the marketplace. So there's number one at the top of the dashboard here. This is kind of the command central. You can look across 12 portfolios, the 11 sectors and the FANGs, and you'll see where all the money's going. You're going to know what is money coming into or out of communication services. Well, it's peaked. It's already peaked in communication services. And if it's peaked, that it's giving you a chance. As good as things seem to be right now, and it's been an awesome stretch, we are coming into a peak. So look at this. This is broad market sentiment. It actually has peaked already. The market tends to be behind that. And so it's not always the case, but it generally is. And at new months, at the beginning of new months, new money comes in. People will put money to work in their 401ks, their retirement plans. They've got these program contributions. I do it. You know, I've got managed accounts, and that stuff continues no matter what I'm trading. And so that tends to give stocks a lift for a couple of days. We know that. So then we're going to go, I'm going to trade the stuff that is as hot as possible during this time, like Zscaler. I mean, that's great stock, those kind of things. Clearly CAR, Avis would have, you know, what a wonderful trade. The stuff that's got immense sentiment like that, that's what you want to trade. But you also now have to beware. I told folks yesterday on pre-market prep, you'll remember, Spencer, I said, Tesla's been a fabulous stock to trade, and the buy-sell balance will tell you that. There's no question. You can look at Tesla and look at how great it's been. It has been a fabulous stock, spending time above 5 and a lot of days at 10. But look what short volume did. It's the exact opposite of Avis. It moved above trend, and it's a meaningful trend, and that's probably the end of the run. So take your money and go do something else. So that's what we're looking at, Spencer. We're looking at the last of the opportunities in these things that are pegging 10, like Tesla. We could rattle off all kinds of great stocks that spend time at 10. I try to share those with folks at Edge through our daily market desk notes. But I'm watching broad market sentiment, and it's telling me that no matter how much people talk about the great things that are going on in the economy in terms of how well the consumer is doing and how much money is chasing limited goods, it is a time for us to think about removing money from the market. That's my next step. And there's a Fed meeting occurring right now. Mm-hmm. We kind of know what's going to occur tomorrow. It's today and tomorrow. But if for some reason, if there's going to be a point where the market, because it's peaked, it's the Ferris wheel at the top of the turn and beginning to come down, maybe the prudent should foresee evil and hide themselves and begin to think about getting out of stuff like that. If you made a ton of money in CAR, take the money. That's a great return.
That's it. Yeah. And I would say Tim is he does this every so often where he'll turn bearish, but it's not. These are not long-term calls.
Exactly.
If anything, they're like a couple weeks, or maybe even a month, and then when the sentiment turns, he turns with it. But these are not long-term calls. He's not calling a long-term top. Maybe he's calling a temporary top, if anything. But
exactly.
Yeah.
We're talking 3, 4, 5. I like to trade things in 3, 4, 5, 6 day increments. And if you take your gains and then the market gets turbulent and then you come back and repeat that process, that's how you beat the market. Losing 5% is no fun. So if you can, if the data are telling you that's beginning to come, well, take your money, go on, take the money and run, as that great philosopher Steve Miller would say.
I mean, every time I've ever been down, I just delete the app on my phone, and then I don't have to deal with that problem anymore. Tim Quast is the founder and CEO of Market Structure Edge. Joins us several times per week on our various shows. On this show, on Pre-Market Prep, and we appreciate that, Tim. A pleasure as always, sir. Glad we could talk Avis today. Today was a crazy day, so glad we could have you on. I'll talk to you again next week. AB, you're still here, lurking in the background.
What up, Spencer? How we doing?
Good. We got 4 minutes until we got to wrap up here because we have the roadmap coming up live next, our NFT show. And you know what? The craziness with Avis today does rival the craziness in NFT land, but there's an Avis. Look, we're up there now. There's an Avis in every day in NFT land. So let's see. I don't want to give any false information. Who they have on the show today?
Something spooky. I know that.
Yeah, I saw the graphic and I was confused. Sneaky Vampire Syndicate.
Spooky. Told you
that you were on the right track. You're on the right track. Sneaky Vampire Syndicate. An artist at the they're talking about Bored Ape Yacht Club, which I do know about, or at least I've seen things about on Twitter. Hall of Fame Goat Lodge. If you don't know what any of these things mean, yeah, it's okay. That's why you watch the show, to learn, because this is a whole new world for me as well, which is why I'm not on that show, because I don't know anything. I rely on them to tell me.
Yeah, I'm not too knowledgeable on the NFT front, but it's fun to dabble in. So
it's fun.
If you don't know anything about NFTs, stick around. Our guys over there on the roadmap will get you caught up.
Yeah,
you'll learn something there.
You will.
I guarantee that.
Last thing, how's our snap trade doing from like an hour ago, an hour and change?
We are exactly 0% up or down.
Oh man,
which is no fun.
What are we gonna do? All right, real fast. Looking ahead. We've got the roadmap. We got at the close with myself and Joel at 3:30. Money Mitch at 4. Cannabis Insider at 4:30. Tomorrow on the show is going to be nuts. Tomorrow we got Funware, Randall Crowder on the show at 12:15. We've got another interview at 12:30. We're doing explain this to me. We're doing an AMA. We're doing an Ask Me Anything with car parts apparently at 12:45. I didn't know that. We got JC Kaler on the show at 1 o'clock. We got a big show tomorrow. A lot going on. 4 guests. So
yeah, we'll see y'all there.
We had 4 guests today as well. So
I'm excited.
I'm also excited for tomorrow. So if you'd be so kind to hit that like button, we'd appreciate that. And again, this is like a new show. We are just starting out. We're crawling here. We want to start walking, but we're crawling. We're going to be making changes, but we are very, very, very open to suggestions and feedback. So please, if you have anything, there was a few questions, suggestions in the chat earlier about what we could do as far as debates. They were good. If you have anything else and you want to let us know, just email us at this email that I'm putting up on the screen right now, shows@benzinga.com. Whatever you want to see, whoever you want to see. Well, not whoever. We're not going to bring on, like, I don't know, some random person, but maybe we would. I don't know.
All right, y'all. Like Spence said, smash the like if you have not already. Please email us down there. Give us some feedback, suggestions, etc. With that, we are going to sign off, and we will see you tomorrow at noon Eastern.
That's the plan. How do we end this show, AB?